Imagine this, you log into your Phantom wallet and see $1.6 million. It feels great, right? But here's the thing, that number only means something if you follow one key rule. And it's the number one rule every crypto millionaire follows in a bull run. If you miss it, you will see your gains go to absolute zero. And believe it or not, taking profits is actually the hardest part for most investors. Everyone thinks they can hold forever and keep making money, but that's where most people go wrong. So today I'll show you how to take profits and also how to keep your profits secure. And let's be honest, most people are emotionally attached to their gains. They see the numbers in their portfolio go up and they don't want to take anything off the table, they just want this number to keep growing. But the markets are cyclical and whatever goes up must go down, especially in crypto. And everything in crypto follows Bitcoin 4-year market cycle. Even though we are in the bull run, we have to take into account that eventually you will have to sell every crypto you own. We will hit the top and we will go into the bear market where the prices keep going down and down. And from the top of the previous cycle to the bear market bottom, Bitcoin went down 75%. And most altcoins at the same time went down 90 to 95% or even more. And the vast majority, like 99% of meme coins from this cycle will completely die in the bear market. So you have to actually take some profits off the table if you want to change your life and make money with crypto. And the whole goal of investing is to actually get more money than you initially entered the market. And most of the people are actually doing this mistake. Let's imagine it's a chart of some altcoin, okay? You went in quite early, you bought at this price, then you saw the gains keep stacking and stacking, and eventually we saw the market top and this altcoin is dropping drastically. But you weren't taking any profits along the way and you actually round tripped the back and you sold at the same price that you entered in. You could protect your capital and actually make some gains if you decided to take profits along the way. And since we are in the bull market, you can assume that most of the stuff that you buy right now will eventually go up. How much? It all depends on the coin, basically. Here are some basic strategies that you can implement to take profit. For example, you bought a coin and the price per coin was $1. So let's say you waited a bit and the coin is now worth 1.25 cents. So it wouldn't hurt to take some profit. For example, you could take 10% of your initial investment. You don't have to sell everything at once. You can just sell small portions every single time the coin makes some gains. Then you could, for example, sell once the coin reaches 50, then you would sell 20%, and you can keep going and going. And make sure that with this strategy, you will at least secure your initial investment. You can just shave small profits every time the coin makes some gains. You don't have to sell everything in one go. You can also use this strategy on like centralized exchanges where you can trade coins and you can place limit orders that you want to sell once the coin reaches certain price. So you can make this automatic so you don't have to care about staring at the charts all day. Another popular way of taking profits, which is actually the most popular one when it comes to trading meme coins, is waiting until you make a 2x. For example, let's say you invested $100 into some meme coin. Then it turned into $200. So now you sell 50% of your entire position, so you secured your initial investment of $100 and you still have coins that can potentially increase in price. And if you leave a moonback like this, you can just keep shaving the profits as long as the coin is going up, and you can use that initial $100 to invest into something different. And another way to preserve your capital is to reinvest your riskier assets like new altcoins into more safer cryptos like Bitcoin or Ethereum. But remember, even if you reinvest into Bitcoin, you have to keep in mind that it will go down in price. However, Bitcoin shouldn't go to zero. And that's not the case for most altcoins. So you can also take some profits and put them into Bitcoin or Ethereum. And remember that we can never predict the market peak. So it's better to actually take some profits along the way than waiting for the top and seeing that we are crashing down in a matter of weeks. There are still people hoping that we will get to new all-time highs back in January 2022 because they didn't understand the market cycles of Bitcoin. And okay, taking profits is great. However, you have to keep in mind that your profits have to be stored in a safe way. The only two ways that you can store your profits and call them secure is to withdraw your crypto into fiat and move that fiat into a bank and then hold it in savings account and reinvest it in another assets, or you can turn your crypto into USDT. However, if you turn it into USDT, make sure that you store it on your hardware wallet, for example, SafePal. I will leave a link to it in the description below so you can safely store your crypto. Hardware wallets are way harder to hack. It's pretty much the only way that you can safely secure your crypto. And if you are looking for centralized exchange to actually turn your crypto into fiat, I also have links to exchanges in the description down below. And make sure to pick the exchange that is working in your country and has the lowest fees and the actual currency that you want to withdraw. The other important thing that you have to keep in mind while taking profits are taxes. For example, in my country, which is Poland, if I turned my crypto into fiat and then withdraw the fiat from the exchange, that would mean I will have to pay tax. However, if I decide to sell my crypto for stablecoin like USDT and then move it into my hardware wallet, I would use this USDT to buy more crypto in the bear market, which I'm planning to do, then I don't have to pay any tax at all. It all depends on your country. However, in my case, it would be much better to actually turn my crypto into stablecoins and then store my stablecoins on my hardware wallet. And even if I needed some money, I can always turn USDT into fiat and withdraw it from the exchange. And why it's actually important to hold your crypto on your own hardware wallet? First of all, you should never store your money on centralized exchanges, because even the biggest exchanges can collapse. For example, FTX was valued at 32 billion, but it collapsed 2 years ago because so many customers tried to withdraw at the same time and it turned out that they don't have the money. So it completely fell apart. You don't want to have your funds on an exchange that went bankrupt because there's a small chance that you'll never get the funds back, or you will have to wait years before you will get your funds. For example, payouts for the FTX will start in January 2025, I believe, with future exchanges that will collapse because obviously some of them will close down. You may never see your funds again. And you want to store your crypto on the hardware wallet because it's actually safer than, for example, Phantom wallet inside your browser. Pretty much impossible to get hacked if you have your hardware wallet and you don't connect it anywhere. You just use it to store your crypto, and if you want to do anything with it, you just move crypto from your hardware wallet to different wallet like Phantom and then you trade it. So it's way safer. But before you even think about withdrawing your profits, you have to first make them. So if you would like to find potential tons of cult meme coins, you can click the video that's on your display right now.